Today I'm actually walking in the Sea Cliff neighborhood here in San Francisco. I wasn't going to make any San Francisco videos this year, but I thought, well, this is right across the Golden Gate Bridge, not too far from me, and it seems pretty safe. And it's a great place to talk about real estate because we're walking among some of the most prestigious real estate in all of San Francisco here in this neighborhood. And here's the thing about real estate right now. There's a couple of big corporations out there, most notably Berkshire Hathaway and Zillow, are talking about how mortgage rates cannot fall enough right now for Americans to afford a home. You know, a couple months ago, I talked about a story on how Zillow came out and said that even if interest rates were at 0%, people still wouldn't be able to afford homes in America's most expensive cities. This is one of them right here. Now, in typical parts of the country, Zillow says that mortgage rates would need to drop to 4.43% to make the typical home affordable to the average buyer. However, even at 0%, it still wouldn't be affordable in New York, Los Angeles, Miami, San Francisco, San Diego, or San Jose. And of course, if you're a homeowner right now that has a low mortgage rate, well, then you're not going to want to put your house on the market unless you can get something even more affordable. Most people don't want to spend more if they're going to sell their house and move. They want to pay less. Unless you are moving up in the world and you're making more money and you have an expanding family, then that's kind of like the one exception. But a lot of people are looking for a cheaper place to live right now, not more expensive. And the problem is, even though a lot of homeowners received a lot of equity over the last few years, that's not enough for them to actually pay more for another house at these interest rates today. Even if interest rates were to fall to that less than 4.5% mark, a lot of people who have a good rate now still wouldn't be able to afford to buy a new home. That's what Berkshire Hathaway says. And that's why the housing market is going to remain pretty stuck for a pretty long time, because even existing homeowners are having a hard time affording to buy a house right now, let alone people trying to break into the housing market for the very first time. And before, this hesitation to put homes on the market was causing an inventory shortage throughout the country. However, now there's no more inventory shortage. We are back to pre-pandemic levels of listing inventory throughout pretty much all of the country right now. There is a handful of markets out there where inventory remains well below what it was before the pandemic, but those markets are now the minority, not the majority. You know my channel?
Know your channel.
Oh, cool, man. What's your
I
name?
used to watch it, Jim.
Jim?
Yeah, how you doing?
Nice to meet you.
Good to meet you.
Hey,
Yeah.
first time doing a video over here.
Good to see you here.
I know.
I live in Marin, and I remember when you did a videos in, was it Tiburon?
Uh-huh.
Tiburon, Belvedere, around that area.
Yeah,
I
yeah,
remember that.
yeah.
It was very good.
Cool.
Cool.
I appreciate you being a fan of the channel, man.
Sure, I sure am. I appreciate you also.
Yeah, absolutely. Well, I'll
Okay.
keep them
It's
coming.
good to see you out here again.
Thanks for saying hello.
Okay, you're welcome.
All right, take care.
Okay, take care.
I always love when people stop and say hello, guys. So if you ever see me out walking around, feel free to say hi, just like Jim did. Now, when you look at what's happening with home builders have the most amount of unsold inventory than they've had in 16 years, guys. Well, what happened 16 years ago? Oh yeah, that's right. We were in a massive housing crash back then. And by the way, speaking of real estate, this is another one of Robin Williams' former houses over here by Sea Cliff Drive. It even shows on Google Maps. You guys can check it out. Looks like the new owner's undergoing a full renovation. But when we look at what's happening on the brand new housing market, it's not looking too good. And that is a sign of what's to come for the existing market. And it's already starting to bleed over into the existing market. According to Parcel Labs, the number of active listings on the market this summer rose to over 3.06 million, which is a 4.9% increase from the same time last year. And at the same time, you have a record amount of sellers delisting their properties. That's still not enough to actually make up for the massive increase in housing supply that we're seeing right now. So that whole narrative that we have a shortage is completely busted right now. And yet still so many people are talking about how we still have a shortage. Homes are also sitting on the market 3 weeks longer than they were a year ago, guys. That's almost a month for anybody counting. And that's a huge sign that sellers are still kind of anchored in the past. Sellers don't want to face reality of what's happening today. And it's funny because the way that they talk about this housing shortage is like this. This doesn't mean that there's an influx of housing in the US. We're still short millions of units. It just means there aren't enough people who can actually afford to buy a home. So they're telling us that the reason why there's so many homes for sale is because people can't afford to buy them. But if we built more, then they would be able to afford it. Now, the only measure of truth in that statement is the law of supply and demand. When you have far more supply than demand, prices do come down. However, we already have more supply than demand. Right now, there's about 500,000 more sellers on the US housing market than there are buyers, and a lot of these homes aren't selling. So we've already met the criteria of homes to become more affordable, but sellers are just refusing to lower their prices. At least the most stubborn ones are. But how can you sit there and say that there's a housing shortage and we need to build millions of more homes when there's already, right now, in October of 2025, more homes for sale than people are willing to buy? How can you say that there's a shortage? If there was a shortage, then all of the homes would be sold. We would be back down to just a couple months supply of inventory. Things would be extremely tight and homes would be selling for over asking price because people just can't get enough of them. But we're not seeing that. As of October of 2025, according to Realtor.com, the typical home is now spending 62 days on the market. And that's as of back data going back to July. It's probably even more than that right now. And this lines up roughly with how many days on the market it took to sell a home before the pandemic. So it's pretty much safe to say that the housing market has returned to pre-pandemic norms besides the prices, but the prices are starting to catch up to that. But they do admit here, like, listen, wages have not grown at the same pace as home price appreciation, making buying a house feel even more unaffordable. And if nothing changes, like mortgage rates, inventory, or wage growth, it's likely the housing affordability crisis will persist in the US. Well, we know wages aren't going to magically go up. Interest rates are going to be pretty stuck to where they're at right now. And inventory is already higher than what it even needs to be to meet buyer demand. So there's only one other thing left to move, and that is home prices. And speaking of home prices, when we look at what's going on right now with the national home price data, home prices now are actually going negative nationwide when you account for inflation. And inflation is a very real problem for all of us. We know it's not this imaginary thing that no one is worried about. In fact, it's the number one thing that basically everybody's worried about, combined with the job market. Now, as of the most recent data from Cotality, which used to be CoreLogic, home prices nationally only grew 1.5% in August compared to 1 year ago. And that is now the weakest annual increase in over 2 years and is well below the current rate of inflation, which we just got the recent CPI reading for September, which is at 3%. So inflation is growing at double the rate of home prices right now. And real estate has always supposed to be a hedge against inflation. At least that's what so many people were told in the past. Well, real estate is no longer keeping up with inflation. In fact, it is now going negative when you account for inflation. And keep in mind, these are government statistics. The CPI data has been wrong forever, okay? And the real inflation data is much higher than what they want to admit. So if we just go by the rule of thumb that the real inflation numbers are double the CPI data and real inflation's at 6%, home prices are only increasing at 1.5% per year, that means you're actually losing 4.5% per year on the value of your home right now if you're a homeowner when adjusted for inflation. Think about that one for a minute. And think about this. Owning a home is most Americans' biggest financial asset that they have. And even though the stock market continues to break new record highs, only 43% of Americans report owning stocks, according to the Federal Reserve. So only 43% of Americans are reaping the rewards of these record high stock prices. But national homeownership rate is at 65%, so a lot more people own homes than stocks. But your home is now losing value year over year when adjusted for inflation, unless it's increasing far more than that. Like, for example, if you have a house that went up 10% in value in the past year, well, then obviously it's beating inflation. But in general, These are the numbers we're talking about here. So it's game over for the housing market, guys. Buying a home is no longer a hedge against inflation. Investors have no real incentive to buy homes anymore, especially since the rent prices can't even keep up with the cost of ownership anymore. So who's gonna buy at these prices? No one has an incentive anymore. And by the way, I walked over here to Land's End real quick. I have to show you guys the view here. It is absolutely stunning. Take a look at this. You got the beach down there, the Golden Gate Bridge, and the Marin Headlands, all with the water here. Couldn't ask for a more beautiful day to be here. I'm really glad it came. And one thing that a lot of people haven't thought about because of this situation with housing going down in terms of inflation is that this can actually have an impact on how homeowners view their financial well-being and ultimately impact spending patterns in the economy. What we saw over the past few years was this massive wealth effect. People saw their portfolios rising, people saw the home values rising, and made them feel very rich and confident to spend more. But now all of that is coming to a reversal. Even if you are seeing exploding values in your portfolio, a lot of people are skeptical that it can continue in that direction for a whole lot longer and are still holding back on the spending. According to Zillow's most recent data, they say the typical home value as of September is $364,900, but they also noted that its Zillow Home Value Index showed flat home prices rising 0% from the same month 1 year ago. So according to Zillow, home prices are not going up at all right now, whereas according to Cotality, it's 1.5%. Either way, inflation is killing any gains you might or might not have. So is this exactly how things went down in 2008 when people lost 30 to 50% of their home value over the course of 5 years? Not quite, but it's actually looking like it could be worse than that because this decline in home prices is being hit with a double whammy, guys. Not only are nominal home prices coming down in more than half of America right now, but when adjusted for inflation, it's coming down much faster. And that's a problem we actually didn't have back in 2008. You know, the inflation wasn't out of control back then like it is now. And so homeowners today are seeing a loss of equity from both home price declines and inflation. And if you want to know the true value of how much homes prices have been coming down, when you look at US home prices priced in gold, honestly, home prices have been coming down since the early 1970s, guys. Take a look at this chart here of home values in US dollars versus gold prices. And right now, home prices are just as low as they were back in 1980 when priced in grams of gold. And it was actually higher in 1970 than it is today when you price your home in gold. So what that tells you is that home values have been declining for the past 50 years when priced in real money. And everybody kept looking at the green line like, wow, you know, home prices keep going up over the long run. And when you price it in dollars, even the 2008 crash looks like a blip on this map. And it just kept going up after the recovery, which it did. But who cares? Because the value of the dollar is turning into nothing. It's turning into mush. So this is not a good look for real estate right now, both for traditional homeowners and for real estate investors, because the incentive to buy is fading pretty quickly. And anybody who's looking at the data we just talked about with a level head right now is going to say the only way I would even touch real estate is if it comes back down to earth. If prices actually make sense again, where I can easily afford my payment. But that means people who own these homes today are going to be selling at pretty substantial losses in a lot of cases. Now let's switch gears for a minute and move over to a viewer story that was sent in to me by Bert. Bert owns a condo in Broward County, Florida, and he wanted to tell me about this unusual situation that he's facing over there. And I wanted to cover this to give people an idea of what can be done if you face a similar situation. Bert owns a condo there, and his condo board hired an internet provider to provide internet for the whole building. Bluestream is the name of the company. And he says the board there operates without transparency or accountability, and they won't let anybody contact them, which is a violation of Florida law, by the way, which we'll get to in a little bit. But he says this leaves residents with no effective way of raising or resolving issues or contacting the board in a meaningful way. And what happened is, ever since the condo board decided to go with Bluestream, the internet service has been horrible, and there's been major speed drops and connectivity issues. And even though it's supposed to be 1 gigabit speeds, the speeds are very inconsistent and often well below what's promised, which ends up disrupting his remote work and Zoom calls from home. And because of this situation, Bert feels trapped because he can't withhold his HOA dues, because then the HOA can put a lien on your property if you do that. And also, because the contract with Bluestream is with the board, he's not recognized as an individual customer with the Bluestream internet company, and basically is getting ghosted by the company because they're not helping to resolve any of the issues he's having with his internet. And the thing is, situations like this crop up all the time when you're dealing with condo boards or HOAs. So what can be done about this? Well, the first thing is, according to Florida condo law, the behavior that his board is exhibiting is against the law. Okay, it's violating Florida Statute 718, where the board must post notice of meetings, and owners have the right to review all contracts, including the Bluestream internet agreement, and owners must be able to contact the association or property manager, another thing that they're failing to do. And as far as the internet agreement goes, even though Bert is not the named customer, the condo board is, Florida law still has some protections for him. If Bluestream is not delivering the promised speeds, especially since Bert pays extra for the gigabit service, this becomes a breach of performance, and the recourse is as follows. First, you need to demand that the board produce the contract, which is also a requirement by law, to confirm the speed guarantees, the service level agreement, the termination clauses, and how to file a complaint. And also, if there's interference with Bert's ability to work, that equals financial harm to him. And if the board continues to refuse to address this critical service, then they can be accused of failing to maintain common services, which could ultimately open up the condo board to a lawsuit from Bert. So what Bert needs to do is, first he needs to send a certified letter to the board of directors of his condo requesting all the records for this internet contract according to Florida Statute 718. Then Bert should be documenting all the trouble he's having with the speed and dropouts of his internet, and then talk to other residents and see if they're having the same issues. And if you are, organize together and petition for a meeting. And then to take things a step further, file a complaint with the DBPR in Florida, as well as the FCC and even the Florida Attorney General. But the reason I wanted to bring this up is because people have issues like this all the time with their condos, with certain things not being enforced and promises not being met. And if the board is failing to respond to your request, they are violating the law, especially if the condo is located in Florida, but I'm assuming other states have similar protections. But the good news is here that Bert is not powerless and does actually have recourse for this. It is going to be work. It is going to be a hassle to go through the steps that I outlined. But the point is that something can be done. And I wanted to address this here because other people might be going through similar issues, maybe not related to internet, but other building services that they're not receiving, and can follow the same steps that I outlined here in order to actually change things and finally see a result. But you know, everything I talked about today, besides Bert's condo story, to me is good news when you're talking about the housing market, because this shows you that things are really turning around in a meaningful way right now, where it just seemed like it never was going to at the height of the market. So many people bought into the FOMO mentality. If I don't buy a house now, never going to be able to afford one. And so many people are regretting that decision and losing a lot of money because of it. But if you've been buying gold and silver, for example, over the past few years, like I've been telling people to, you've been preserving a massive amount of wealth that can go towards a home purchase if you would like it to. And you're going to see that big discount in home prices like we've been talking about. Or even if you've just been steadily investing in the stock market, the gains in the stock market have been far outpacing what we've been seeing in real estate, and can still be more than enough to make up for purchasing homes today at a discounted price. And this goes to show you that people who have been patient really are going to be rewarded right now over the next few years as home prices continue to decline and sellers become more desperate to sell, as there's just fewer and fewer buyers out there to buy the homes that are listed. So if you guys enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.